Right, ladies and gentlemen, thank you very much for coming, and first of all, my sincere apologies for having landed an hour and a half too late at Dubai because of a tiny amount of snow in the Netherlands. So these are the joys of climate experienced before it even started to change. My name is Steve Peachy. I come from the World Savings Banks Institute. I'm their advisor for impact beyond access to finance. The World Savings Banks Institute is an industry body of 68 global south countries with members all around the world, spreading from Latin America through Africa, South Asia and into East Asia. And we also have a large European membership and North American. As a body of banks who have social responsibility built into their corporate DNA, we 100% believe in the fact that our members are there to serve societies that they work in. Obviously, therefore, the issues of gender and climate change are really, really important to us. We all know the loss of activity and potential that is there because women are not as well served by the finance system as they would be if they were men. We also know, I think it now goes without saying, that climate change bears particularly heavily on women. So we represent banks that are really, really interested in reaching towards the bottom of the pyramid. We have always focused on financial inclusion for low-income and vulnerable households, and we now want to take climate finance to them. And you only get that right if you work with the women in the household, sometimes as head of household, but also as the young adults in the household who've got to make that transition into working life. Now, I'm really pleased also to introduce our hosts here. Professor Bada representing Ag Fund, who are a member of WSBI and have kindly given us this slot in your pavilion. The title of the slot is Building Climate Resilience for Women Entrepreneurs through Digital Innovation and Women's Financial Empowerment. And we've got a great panel from FMO, the Dutch Development Finance Institution. We have Carrie Wolczak, if I pronounce that half reasonably. And then from Uganda Development Bank, we have Patricia Ojangoli, the Managing Director of Uganda Development Bank. So we have two of the sort of partners we work with all the time to move this agenda forward. And then we have from a project within the WSBI portfolio extended through one of our members, La Caixa Foundation, the Spanish Savings Bank Social Foundation. We have one of the key implementers in India, Ms. Kanika Verma. I'm very glad that the three of you have agreed to speak. I'd like to start, perhaps, Kanika, if you could help us think about what it's like to create tailored products and services that work for women at that frontier between formal and informal finance. And maybe you could give us a few words now, please.
Sure. Is this okay? It's clear? Okay, great. Thank you so much, Stephen, and thank you so much, Ag Fund, for giving us this opportunity. I'd like to sort of highlight as a response, three areas that I think need to be sort of looked at as we move the conversation forward. The first is that our approach towards creating these products and services is to first sort of help women understand and build entrepreneurship. We have an inclusive approach towards it, which enables entrepreneurship to become a choice for them first. Because most of the time, women move towards livelihoods because of subsistence needs. And I think what we've been trying to do is get them to move towards opportunity-based entrepreneurship. And we do that particularly at what we would call a provincial level in India, in one of the most backward states, where we have three levels that we're trying to change in the system in order to accelerate women's entrepreneurship. The first is unleashing those energies that exist. And this is where complementing finance with a business competition that we run for women is extremely important. What it enables women to understand is that they can be an entrepreneur as well. It's called Kaun Banega Business Leader, which is it's like the game Who's Going to Be the Millionaire. And we run it for 2 months, and we've seen fantastic ideas that come from women. I think that's the first thing to recognize, that women are full of ideas, and we need to support that. The second is getting the communities to become much more sensitized towards women's entrepreneurship, and also accepting that it's all right for them to take credit for these activities. And the third, of course, is where we work with different financial institutions and partners to accelerate the support that is available. So, for example, what we've done is we've created a platform, again at the same provincial level, which enables everyone to come together and create solutions. 2 examples, because we've created these different kiosks, which are providing these enterprise support services and accelerating it, we've seen that women demand much more of finance now. We've seen a 5-fold increase in access to finance in those areas. And that's just been possible because of this platform, as well as this network of entrepreneurs who are supporting other entrepreneurs in the form of this kiosk. The second thing I want to highlight is innovation. How do we accelerate innovation? How does finance accelerate innovation? One example I'd like to share is women's mobility continues to be a big problem. And particularly in terms of the climate risks, we need to make sure that they have access and they're self-reliant and self-dependent. And one of the things we did was actually created these e-rickshaws, e-tuk-tuks in just one district in India, one province in India. Now we have about 100 of them running, where we built the ecosystem. And not only are women supporting other women entrepreneurs, but also making sure the schoolgirls don't drop out because of that. And that's only been possible because of a very interesting product and service that we have, which is a social investment platform, which is a peer-to-peer lending platform that enables finance to open up. And the third thing I want to highlight is basically understanding data and knowledge. 98.5% of these enterprises that have been supported have been paying back. 98% of them actually continue also to be resilient. So a lot of investment has been made by us and continues to be made for learning and knowledge. I'll come back to more, yeah. I don't know if I answered your question, of there's something more.
That's fantastic.
Yeah.
That's fantastic, because there is a story, in effect, from the enterprise and empowerment end first. Professor Bada, if I could turn to you now from AgFund, could you first of all explain the network of MFIs that you run, and also the very strong gender focus that AgFund has?
I think you have one.
Okay.
Yeah. No, it just might be easier. Stephen and I can share.
Thank you very much, Mr. Steve. AgFund is a big organization, works on different areas, including women empowerment, blended education, and NGO network, as well as women training and studies center, as well as financial inclusion. And financial inclusion is one of our biggest parts after the what we call Arab Open Universities in 8 countries. We have also 8 banks in different countries in Africa and Middle East and Arab countries. In Africa, we have got 3, one in Sudan, Mauritania, and Sierra Leone, and then in the Middle East, I think Syria, Jordan, Lebanon, Palestine, Bahrain. All of these banks are working in a certain formula because ACFund is SDG oriented. And also ACFund likes to work with partnership, as well as it is a social business model. The lady here said social investment, the way they are doing, and we are doing social business, and I don't know whether this is different or not. In fact, the social business is that we work on a lucrative base when it comes down to financing or giving any services to our clients. But the capital is funded 50% by ACFund and 50% by internal organizations, banks, individuals, whatever. And there is no any sitting fees. They are part of the board of directors, and but there is no any sitting fees, and there is no any dividends. Our banks, when it comes to your question, I'm sorry, I have just explained the framework. Now, our banks are women-oriented in most cases and climate change oriented. On average, we have got about 60% of our clients are women. And since inception, we had more than 4 million women financed by these, by our banks. And for example, I'll give you a case of Sudan, where I am coming from. Our bank in Sudan is mostly, I think, over 70% women in the rural area. We link them to, we train them, make social, associations of women, saving and lending, giving all the necessary financial and non-financial services, including digitalization, including finance, including saving, mandatory and optional, as well as insurance, weather index insurance in the agricultural sector. We worked in different parts of the world and of the country, and mostly in gum arabic and peanuts, where these products are really very important, and they are produced on a small scale in the rural Sudan. There are so many other services we give to women. I think I will come to them later. Thank you.
I would just like to ask one question, because I think, as Kanika explained, the starting point for Work for Progress, the program that you're helping our Spanish member deliver, is women's empowerment with finance at the back end. You mentioned also, Professor Bada, that you put women into, or you work with women through group mechanisms. And I think that is common, isn't it, Kanika, that you too create these collective mechanisms that allow women to support each other. And I have to say, at WSBI, we started on our road to impact beyond inclusion with a grant from the Gates Foundation that was initially just to create banking accounts, savings accounts for poor people. But we very, very quickly realized that there is no such thing as the formal banking system. You actually have to deal with informal mechanisms, and these informal mechanisms are very, very powerful. Most people in groups will have a bank account, like your customers, I guess, Professor Bada, yeah. Some of them will have opened bank accounts, before they got into their group, or their group opened a bank account. but it wasn't working. And I think it's absolutely critical that one can keep providing services through the groups to reach the kind of women who would otherwise not feel empowered to take them. And group linkage is a very important part of what WSBI focuses on, especially if we want to get small-scale climate interventions funded with the kind of women you're both talking about, I think. And I think you have a fantastic story to tell, don't you, that the bank in Sudan has kept serving those women throughout the current troubles, as I understand it.
About almost 75% of our branches are working, except those are in Khartoum where there is the fighting going on.
We're all here for COP28. We all know the huge amounts of money that need to move for adaptation and finance. And Patricia, I wonder if I could turn to you now to talk about the very special challenges in your country, but also the huge opportunities there are now that mobile money is truly reaching women of all ages. It's yours.
Thank you, and happy to welcome you to reflect and think about Uganda. So, in Uganda, the climate finance priorities are towards adaptation, and already the country is living every day with these impacts. Currently, this year, for example, we have experienced a rainy season, which is unusual. We currently undergoing El Nino rains, and what we are seeing is a lot of flooding. So the country has very many streams of rivers through it and freshwater lakes. So rising water levels, rivers bursting their banks, flooding a whole area, people getting displaced, dying, crops, disease outbreaks, etc. So those are happening right now as I speak. And that is why the priorities have been towards adaptation. The country is agro-based, agrarian, and I think we all appreciate the impacts of climate change, especially to this sector. And therefore, aligning financial policies to practices and principles that support green growth, particularly for adaptation, is very, very necessary to mitigate these impacts. So this also has presented a number of opportunities, especially for financial institutions such as ours. And therefore, what are we doing to enhance smallholder adaptation and climate resilience? One of the things that we must do and proactively engage clients is around water for production, for example. So we are very deliberate, and our farmers are smallholder. So they are in groups, they are in farmer cooperatives. So at that level, we support them to acquire, water for production. So this time it is flooding, next year it might be drought. So either way, yeah. So this is what how we are currently trying to support them under the farmer group lending model, where they come as a group, support them at apex level. You don't have to deal with individual farmers. They can be up to 1,000 in one group. And so that's how we have been able to support them towards adaptation. The other thing we are doing is partner with the national research organizations to develop, pilot, multiply drought-resistant, high-yielding crop varieties for the farmers. So you ensure that you have availability of drought-resistant seed, high-yielding, and deploy especially in the drier parts of the country, as an example. Then within the bank, we also do business advisory. I think my colleague has talked about this, but teaching them smart farming practices and, advising them on which type of varieties, what they can do, how they can prepare themselves better for impacts of climate change. And then we've also partnered with some entities to de-risk, provide insurance. I think currently we've signed on the Africa Guarantee Fund, where they're going to support to provide guarantees and de-risking instruments for smallholder farmers and other agri-businesses. We are also partnering with the fintech, digital lending, in that model, and part of that product offering is agri-insurance. So this we support through village savings and loan schemes, which are smaller, more micro than the others, and 70% of our VSLAs are women. So women are able to get a whole package through a fintech that we are lending through. And recently the bank put in place a climate finance facility. So with this facility, of course, across the sectors that we support, maybe just to note, 50% of our portfolio is in the agriculture sector. And I think this reflects the economic structure of the country. So the interventions are really designed to make sure that this sector and the players in there that are mainly smallholder, are supported around adaptation. So one of the things we seek to do under this facility is to mobilize, deploy, measure, monitor, report impacts of the interventions that we are doing. I think I'll stop there for now. Thank you.
Thank you very much. I think that last point you made about measuring the impact, I had the opportunity to work with the British Development Finance Institution, the bilateral development finance institution called British International Investments. Used to be called CDC, but it's now known as BII. And it always struck me that the investment officers have a real challenge because they want to get the investments out. They know that impact data has got to be captured. And it's actually quite hard to get a bank to embed impact data in its onboarding. Do you do anything in that field? Could you maybe just explain a little bit about that? And then maybe Professor Bada, you could come in and explain what AgFund do. And then we'll come to probably the best blended risk financier in the European Union at the moment.
All right, thank you. So we have integrated and mainstreamed data collection in our processes. So we have a specific unit that rolls out tools that we use for collecting ex-ante impact in every business that we do. But also at the end of every year, a few months after we have deployed funding, we'll then go and collect ex-post data. So that happens in our Directorate of Economic Research and Knowledge Management, and that is specifically what they do. So even in terms of measuring, for example, greenhouse gas emissions and related impacts, we have been supported by FAO and EU to deploy some tools, like we use GLIM-I and X-ACT and EarthMap to be able to measure the impact,
Right.
even in terms of greenhouse gas emissions in the projects that we do in this sector. Thank you.
And I presume you catch gender as part of
Yes,
that.
yes, of course. One of the indices is gender,
Okay.
and in addition to that, we have also we have a specific product and value proposition for women. So in reporting, we'll always see how many women have benefited from the interventions. What is the impact on women? Even when you go looking at jobs, how much are we generating for women? How many women have benefited? But just in terms of a value proposition under what we call special programs that helps us come up with innovative financial interventions for the vulnerable groups of people, and in our case we have the SMEs, youth and women. So we have put in place specific value proposition for these groups of people. So in addition to measuring the specific impact of how we are impacting women and how they are benefiting, we have specific value propositions to support women women and women-led enterprises. And as I mentioned, the VSLAs are 70% of women, so 70% are the beneficiaries through this scheme. Thank you.
Yeah, ACFund
Say a little bit about the data as well.
might work differently. Although we have a microfinance unit at the headquarter in Riyadh, Kingdom of Saudi Arabia, which is dealing with all issues related to documentation and financing and portfolio at risk, the number of clients, all of these things we gather at the microfinance unit. Our banks are a little bit independent, and studies are done within the banks themselves. I have to admit that most of the banks, they are doing studies and they are reflecting these studies into the center, into the microfinance unit. But some of them, they are not doing their job in a right way. And we are trying to encourage them to see the impact on the ground. In fact, we are mostly concerned about regulatory framework when it comes to the microfinance unit. We studied the different countries, financial inclusion, when we start to build any bank in any country, and we advise the governments for what to do in order to make our life as a bank in this environment, financial inclusion environment, easy. Let me, Steve, if you don't mind, because you are very interested in the area of saving, we start any clients, we work with a consolidated group, just like other speakers. But when any clients or group coming to the bank, we start with saving, because we think that with saving, the clients will be tied to the bank. This is a first relationship. It's a shaking hands when you get in. And we give other services, like lending, like insurance, climate insurance, they call weather index and all this, especially for agriculture. And according to the studies I have made, and this is very important, maybe it's going to be useful to other guys here, we made usually compulsory saving 10% out of the loan. That is compulsory. It is partial guarantee, and at the same time, it will be given back with the interest, because we are going to use it as a portfolio, and they share this portfolio. I think 60% for them and 40% for us, after covering the cost. As the studies which I have made, I found that the optional saving in Sudan and Mauritania is 3 to 4 times the compulsory saving, which means that, first of all, small farmers or poor people can save. The other question which I cannot answer up to now, from where this optional saving comes from? Is it from assets, they transfer it to bank, or they have got money and they don't know what to do with it, and then they submit it or give it to their accounts in the bank? The other question is that the reward which we give them, I think it is 10% per year, might be higher than the reward which they can get in the assets or in the alternative use of this saving. I think this is quite interesting, and I think we can capitalize on that. Sorry.
Look, that absolutely resonates with our experience with group linkage, particularly if you get a good bank account into the hands of women in groups, and it actually works for them. If the group linkage brings the bank to their village, then the volume of money is mobilized. We've had one project where the total mobilization of funds is 20 times the original investment. And that's the stock. I mean, we put 1.3 million in. They're now sitting on $27 million, and we're now going to try and help them to get that lent back into the villages. And through the year, the total mobilization is actually hundreds of millions of dollars. It's, if you get it right, it can work, and we want to get it right on lending. I'll come back to some learning we have on that later. But can we turn to Carrie now? Because, you know, as an old savings banker, I believe 100% in what you've just said about savings. I think development finance institutions have traditionally, you know, moved credit. That's what everyone thought they were for. Patricia, you've already talked about adding in non-financial services and taking guarantees from AgFund, which is the specialist guarantee arm of African Development Bank, isn't it? Yeah. Carrie, FMO were one of the early movers using European money to put a mixture of TA, guarantees, into banks so that they can move their own money. Can you talk a little bit about that? Because I think it's so important to climate finance.
Yeah, thank you. Yeah, I think it's interesting because I've been in a couple of panels about blended finance, and there seems to be like this mystery around it, you know, how does it work? And I want to just make it very simple to start. I mean, I come from project finance. I don't know if any of you are familiar with that, but when project finance is basically that, you know, you allocate the risk within a project, energy, for example, to the right party who can bear that risk. And blended finance is like another step of that. So it's like saying, okay, who am I? It could be any of us. And what role do I play? And what do I want to achieve? So you actually have to identify a problem that you're trying to achieve. And then you identify the right partners to make a solution happen, and structuring it, like more or less taking the risks and putting the parties where they best can play a role, but also, you know, where they're placed to take on that challenge. And so, you know, FMO has been doing a lot of different, we have a lot of different approaches toward achieving our goals, which are SDGs 8, 10, and 13 equally. And to give you a few examples, so we do invest directly or lend or even put in equity directly into funds or companies. And you see the results of that. So those are also a partnership, right? As we all know in banking, that, you know, if you invest, we have, for example, an investment in Ivory Coast with a cocoa bean producer who's processing cocoa beans. And they are, you know, then working with smallholder farmers to actually provide energy for the processing. They process with solar panels, for example. So you see that's a local partner who knows what they're doing, and they have a big role to play. But another partner are banks, because, you know, we're, you know, mostly in the Netherlands, or we have a few local offices, but we know that you are all moving the markets, for example. So the question is, you know, how can we lend to partners who are on the ground, or not even lend, partner with them in blended structures to move more financing, and then to also scale it behind that. So just a few examples. For example, FMO, with the Dutch government support, manages the Dutch Fund for Climate and Development, which is a very interesting partnership because we actually work with SNV, who you may know, an important Dutch organization, also very busy with sustainable agriculture, and WWF, the World Wildlife Fund, who actually have manage a grant facility to basically make, you know, to find deals that we can support mainly around climate resilience. And to actually support those companies to become capable of attracting financing, basically from, you know, from larger institutions or even local banks, as it may be, but also FMO. And so that's actually a really interesting way of partnering, where you have people with on-the-ground knowledge, and then you basically use their knowledge to raise money and blend in that way. Another example is a program we have that's called Nazira, which was supported originally by the Dutch government and the EU, and now there's new funding coming in from the EFSD Plus program in the EU that basically provides a second loss guarantee to banks to on-lend to what they consider to be risky customers. And we say that in that way because sometimes it's a matter of just experimenting to get to know a market before they can create the right products or something like that to attract the market. So it doesn't necessarily mean it's inherently more risky, but maybe they perceive it as more risky. And one of these areas is in like women entrepreneurs, for example, or in agriculture, even in refugee entrepreneurialism, actually. And that fund is expanding to climate resilience as well. And actually, while you were talking, I was thinking about the fact that, you know, in Europe, certainly we're being pressured as banks to account for our climate risk in our portfolio. And I wonder if we're going to come to a dilemma at some point where, you know, they say, oh, look, you're exposed to all of these assets. You have higher climate risk, like you in Uganda, if you had to account for climate risk in your balance sheet. And then that you actually don't support those customers anymore. You move away from them. And I think we're going to need mechanisms to basically do more even in the future to take on more risky customers and support them. And that we're not being charged for it as a bank. So these are ways to scale, but there's so many ways. I mean, you can be so creative. Last week, we announced a fund with Allianz, the insurer, called the SDG Fund. And basically, it allows Allianz to come in with FMO into investments. And you know, they're an insurance company. They just don't have the experience in the market like you do. So through this whole mechanism, we're getting money from the, you know, international insurance market into local projects, actually, and local investments. So I think that's really exciting. It's a 1.1 billion euro fund, so that's the scaling. Yeah.
I think that's fantastic news. Look, we've only got about a quarter of an hour left. Let's take a few questions from the floor, and then we'll have a wrap up at the end. Any questions from the floor? Lady there.
Hi, my name is Susan Payne, and I'm the co-founder of Sustainable Planet, a company that's actually being showcased here. And first and foremost, I wanted to say thank you all for focusing on this critical topic. This whole department should be packed solidly, and it is so vital. And I'm saying this as not only the owner of a corporate or the co-founder of a corporate in Africa, but somebody who works with both other corporates and with smallholders. And just let me share one thing with you, because this is really important. These initiatives are fantastic. I don't feel them. I don't benefit from them, and the smallholders in our communities don't find them very often. And for me, it's about coordination. And someone, the first day that I was here, mentioned coordination is very poor. I am a former banker, JP Morgan, et cetera. I focused on food security for 14 years. And I have a company now that grows plant protein on sand, on non-arable land. In Mozambique, we're growing on salt flats. Thousands of hectares of salt flats, employing subsistence farmers using 20 times less water than soya. So a direct soya replacement that is hugely sustainable. And even with that model, raising money, 4 years, bootstrapping, 4 years, it has been that difficult. And we've won major awards from the United Nations, African Startup of the Year. We've won some serious awards. So what I'm trying to say is, there are many companies like mine that are hugely innovative. And it's the private sector with people, and there are many women that I've met, many like me, and it's been so frustrating for me to experience this journey. And you can tell my frustration is so immense because I have a game-changing technology that will change this protein into colorless, odorless powder and directly replace soya at large scale, huge scale, with very little water, on sand, on bad land. And the reason that my frustration is so high is because I've tried for so long to connect with people just like you, and at many steps, it's been flustered, it's been stopped, it's very difficult. And if I have that problem, then the coordination is quite poor. So all I would say is, please open your hearts to groups like me, because it's been a very, very difficult journey, and I've had to sell a lot of assets to even get to where we are now.
Look, I'd like, to congratulate you and thank you for that. It's so important.
We did a study for a member bank in Zambia. They want to reach smallholder women, but they can't do it themselves. And they worked out that actually the route to them is through SMEs, particularly high growth SMEs in the value chain. So we went to the World Bank enterprise data and we looked at Findex, global Findex. 40% of smallholders in Zambia are women. 40% of the SMEs in the agri-value chain, both inputs and offtake, are run by women. We just need
women are gonna
to get
women-
our act together.
But women are going to create the difference here. And if it wasn't for women like me, and I just say this because there are countless women like me, but I have actually bought large farms. I own a 3,000 hectare farm in Zambia. I have a 1,500 hectare farm in Mozambique. I am absolutely walking the talk, and getting funding for my farms is almost impossible. So now I've got this technology on a whole different matter that's scalable. And it's on my farms where I am the one as a female who heads the farm saying, we must promote women. I want women to learn how to drive tractors. I want women to be supervisors. I want women at the table. They have to be in positions of authority at the table or we will not move this dial. It's as simple as that.
Okay, Carrie, come in and then I want...
I'll just comment briefly. I mean, I think what's interesting is that we're coming into a time when we need new technology, for example, to make resilience happen. But I see your point that that it's like it would be seen almost as like venture because it's maybe new, but that's exactly what we need ahead, and we need to scale. So how do you match that with the risk appetite? Or that things are so categorized too between like venture and then mature capital. I mean that might not be exactly your case, but I see where there's probably a mismatch in the system right now for this kind of situation, which we're going to need to deal with to make it go ahead. I don't know if you've been in touch with FMO. We might have some solutions. So I'm happy to talk to you afterwards as well.
Yeah, no, I think that in order to sort of this large pools of capital to meet the needs by women entrepreneurs, it's really important to have data intelligence. I think there's a lot of conversation, but it's not that much evidence based. So one of the things we figured out, because we invest in Work for Progress program, we invest a lot into embedded learning. It's embedded into the whole program itself. And women actually are the ones who are actually our biggest champions for learning. We, in that sense, are more facilitators in the process. And one of the things we figured out is actually a missing middle gap that exists in India. I mean, only 5% of women entrepreneurs have access to formal credit in India. Only 5%. And we figured out that there's a missing middle of $350 to $3,500. Now, if you look at the kind of funds that we're launching, it doesn't seem huge. But the thing is, are we even reaching them? Because, the ones that are sort of more in the income-generating activities, they're more on the welfare side. And then you have, the others that are slightly larger. So I think in different contexts, that missing middle might be different. But I think we need to understand that a bit more. And the second thing I think I want to sort of highlight is that how much are we looking at innovation? I think we're very thankful for Kasha Foundation now looking at investments to sort of bridge that gap. We're trying to sort of build a gap fund or a guarantee fund that enables that sort of guarantee to intermediaries. So I think much more innovation in ensuring delivery of these kinds of credit is very important.
Patricia, I think you said you actually use fintech to bridge some of that missing middle. Can you just say a tiny bit more on that?
Okay, yeah. So what we have done is to partner with a young Ugandan innovator. And then we worked with them to kind of build a model following how we need to support the smallholder farmers really small. So, of course, we had to appreciate that these smallholder farmers would not be able to ordinarily walk into the bank as a smallholder farmer without anything and get credit. So, in terms of innovation, how can we make credit available? Their requirements are very, very small, Ordinarily, they would not if you just lend them as an individual, as a bank, you're probably not going to be financially sustainable, and etc. But also the cost of accessing credit, small amounts of credit on them would be very, very high. They just will not be able to afford it. So the fintech does everything digitally. So run the whole process digitally. Of course, using their phone, records and their savings and what they're able to do in a group, digitally scoring them, based on some data which has been built in this platform, and the whole process is done that way. And like I have mentioned, there are different financial services that they're able to do on this platform, including lending. So that way we've been able to support, I think, tens of thousands so far, and we hope to roll this out to scale it up, because if we did not do that, there are people that would just not be able to access credit, even from the informal financial service providers. And the other additionality our intervention brings is the cost of credit, so they're able to also afford this, even though they are damned risky for other people that have been able to give them credit. What the additionality we bring in is they're able to access it at a much, much cheaper cost, but also because of our mandate of promoting sustainable social economic development. So that is how it works, and what we need to do is to scale it up. We piloted it and it's done very well. The collections are also good, almost zero, non-performance. Yeah. So we hope that we can scale this up and enable the very vulnerable, small holder farmers, majority of them being women, to access credit, so they don't have to bother about collateral requirement, process issues, and etc. All these other things which make access to credit complicated.
And you wrap it for us. Okay, I will be very quick. The issue of accessibility to loans and risk, I think most of the governments or microfinance institutions or banks or even the regulatory framework didn't understand that there are some ingredients that should be done. I was the governor of the Central Bank of Sudan, and I was the head of the microfinance unit, where most of the regulatory framework in Sudan, I did it a few years back. Expanding portfolios is a shared problem. It's not one-sided. Most of the banks, they should involve in, and there should be a very strong relationship between banks and MFIs. In my country, we have a regulation that 12% of the total portfolio should go to microfinance, and that makes a very huge amount. We have also very solid insurance for every loan. We have a wholesale insurance from banks to MFIs, and we have a retail insurance for any group of clients who have been receiving any lending. So that makes our portfolio at risk is at its minimum. We never now talk about portfolio at risk. It's less than 2. It's less than 2 in Sudan. Even in the agricultural sector, it has been so high in the past, but now it was 7, 9, 10. Yeah. But now it goes down to between 1 and 2 because of the regulation which we have made and the involvement of insurance company, even a weather index insurance. We did it for Sudan. We have also some experience in Uganda with the refugees of what they call from South Sudan and Congo. Yeah, and I think that even the improved seeds she mentioned, I think it works very well to increase productivity and also the value of the products, and then reduce any due payment system.
Yeah. Yeah, look, I would like to thank my panel, first of all, for still being here when I turned up half an hour late. I'd like to thank you for being here too. You have heard different angles on the same problem, which is we actually have to get money to the bottom of the pyramid.
And we have to get it in ways that it's useful to the people we're trying to serve. And that means understanding them. That means working with the mechanisms that they want to work with. And it means using technology, and it means using finance to all its powerful effects. I would ask you to sort of watch this space, because we really want to address the issues that you raised, not just money for smallholders. We know that we've got to get money into the growth enterprises as well, and we're having some very interesting discussions with development finance institutions, European development finance institutions. We'd love to talk more to Ugandan development finance institutions, and we're talking to the Nigerian as well. It's a great partnership with AgFund. We're sure we can do more together. And I met Kanika at a 2-day convening in Barcelona last month, and we're already just head over heels in love with the ideas that you've created at Development Alternatives. So thank you very much, ladies and gentlemen, for coming to our session, and please watch this space.